Hi, good morning this morning. This is Malan KB and this is video 6 of this course, which is Forex Starter Kit. And today we are going to talk about pips calculation. I'm going to show you how you can calculate pips. I've talked about um, pips and what pips means in the previous video. I think video 3 or video 4. I talk about it and I said I am going to talk more about it when we start discussing on pips calculation. So the first thing you need to do is you go to your browser, you go to your Chrome or whatsoever browser and search for tradingview.com. tradingview.com. Look at the spelling here, tradingview.com, and allow it to load. Okay, once you have TradingView like this on your screen, then the next thing you need to do is I think you have to log in. If you are just trying for the first time, you have to log in, but my own is already logged in. So there's a way, or there's, I think, a free trial or log in or create an account, something like that. So you just go and create your account. You just use your Google account, that's your email and your password, and that's all. Then you come here to the search bar and you search for the pair you want to trade or whatsoever. So for me, I told you our case study for this course is going to be gold. So I'll just search for gold, which even before typing it, you can see it here because I've been searching for gold. So you just type XAUUSD here and it's going to appear. So I'm going to select this one, XAUUSD, the first one. Okay, so this is the chart. And the price action of gold on the 15-minute time frame. You can see 15M here. That means 15-minute time frame. You can see still 15 here. You can just change it to whatsoever time frame you want, just the way I showed you in the Meta 5. So you can always change your time frame. So for the purpose of this video, I don't have any business with the time frame here, so we are just going to continue without explaining or without changing any time frame. You can see it's still showing XAUSD here. You see it's showing gold versus US dollar. So it's still what we are like, it's still the currency, the pair we are trading. So now you need all these tools or indicators or whatsoever they call them, but then if you are just creating your trading view, new trading view, you have to add all these things to your favorite. And I think you need to go and search a video. I cannot do everything because doing this thing will consume another 3 to 4 videos. So you just search on YouTube on how to add these tools on your trading view. This trading view is just like your chart on your MT5, but to have a better look of your chart and see the price action, so you just have to like install, or you have to log into TradingView to be seeing everything clearly. So, and it's more flexible. You can scroll up and down. You can check the previous, even though all these things you can do them on your Meta 5, but to see everything clearly, I think the trading view it's actually good. So now here is where the price of gold is at 371.2. That's where the market closed, because I'm recording this video on Saturday. So and I told you market close on Sunday night and on Friday night, and it will open Sunday night because it's weekend. So brokers are not active, they are on weekends. So now what we are going to discuss here today is the the pips calculation, how you can calculate pips and know how much you are risking in a particular trade. So I will tell you how many pips you'll be risking, or how you can calculate the number of risk and the amount of money, the number of pips and the amount of money you are risking for a particular trade. Now, these lines you are seeing are not part of the chart. We just added them because they are kind of support and resistance, which we'll talk later on in the coming videos. So now let's go deep into the pips calculation. Now let's assume I want to take a sell from here. I want to take a sell from here. That's 33.70. Let me draw a line to be sure, to be seeing everything clearly. Okay, so I just want to draw a horizontal line. Okay, this red line, just take note of this red line. Okay, let me drag it down a bit. So let's assume I take myself from 33.71.0. This red line is my sell. That is, I want the market to go down to this point. So this is my 33.71. I entered a sell with 0.01. Now, let me do a little calculation for you so that you understand better. Let me open the screen more because I want to write here. Okay, so now sorry. So what's wrong? I don't know what's wrong with this. Okay, so let me just look for a notepad and write it there. Okay, let's go to notepad. I wanted to write on that screen. So now let's say we take a sell on gold XAU USD from 33.71, and we entered the sell with 0.01. That's the lot size we entered with, 0.01. Now I told you when this, okay, let me write 0.0 here, 0.0. Now when this 0 moved to 1, we entered sell at 33.71 to 33. We entered sell at 33.71.0. Now let's assume gold move to 33.71.1 on this 0.01 lot size. Now this movement is just 1 pip. If it's moved to 33.71.2, that's 2 pips. This is 3 pips. This is 4 pips. This is 5 pips. This is 6 pips. I hope this is clear. Now let's assume this market moved to 33.72.0. That means gold moved 10 pips. It has moved 10 pips. Now, how much will you be making if you take a sell? Sorry, we are talking about sell. Sorry. Then it has to be 33.70.0. From 33.71 to 33.70.0, that's 10 pips. Now let me make it more clear for you. Okay, this is where we took our first sell, 33.71, and the movement started here and it goes here to this point. This movement, let me just draw another line, horizontal line. Okay, to this point. From this red line to this red line, this is 10 pips. This movement in between this is 10 pips. And I took a sell. That is, I want the market to go down. I want the price to be going down. So from here to here on 0.01, I'll be making each 0.01, and each pips I told you is 10 cents. That is, if dollar is, let me write it down. If dollar rate is 1,550 naira, that is, this movement 0.01 is equivalent to 155 naira. That is 0.01. Let me still make it more clear. Let me write the lot size. 1.0, which is standard lot size, is equal to $10. And $10 on this price is 15,500 naira. Now for 0.1, which is mini lot size, is equal to $1, which is 1,550 naira. And for 0.01, which is micro lot size, is equal to 10 cents, which is 155 naira. Now per pip, sorry, let me add per pip. And I know, and I told you what pip is. Per pip. I told you what pip is. Per pip. Okay, so now let's go back here using this as our formula or as our guide. 1.0 is standard lot size and is equal to $10. $10 is 15,500 naira per pip. If and we are talking about gold, if gold move 1 pip on 1.0, you are going to make 15,500. If gold goes against you with 1 pip on 1.0, you are losing 15,500. Now 0.1, which is mini lot size, is $1 per pip on gold. If market is going in your favor, you are going to make 1,550 naira per pip. If market goes against you with 1 pip on 0.1, you are going to lose 1,550 naira per pip. If market goes in your favor on 0.01, which is micro lot size, you are going to make 10 cents. If it goes against you, you are going to lose 10 cents, which is 155 naira. Now coming back to this, market goes in our favor from 33.71 to 33.70, which is 10 pip. That is, we are making 155 naira times 10. 155 naira times 10, which is 1,550 naira. That is the amount we are making in this movement from here to here. Now the same thing, if we were using 0.1 and this market moved from 33 71.0 to 3370.0. That is 10 pips. That means we are making 1,550 naira times 10, which is 15,500. The same thing if we are using 1.0 for this movement, that is 3371.0 to 3370.0, and market is paying us 10 pips. That is, we are going to make 15,500 times 10. How much is 15,500 times 10? Let me do the math. 15,500 times 10. That's 155,000. I hope this is clear. This is the movement of uh, gold when it comes to sell. Now, this is our first entry, just one position, and we took the position here, and the market moved down here to 3370. Now, let's assume market goes back against us with 10 pips, that is 3371, and the market move to 3372. Let me draw the line. Let me draw the line. 3372.0. Now, instead of marking to go this way and touch this line and pay us 10 pips, it goes against us to this point, which is the second line. It goes against us with 10 pips. On 0.01, which is micro lot size, we are at minus 1,550 naira. On 0.1, we are losing 15,000 naira, and on 1.0 we are losing 155k. Now we can add another position here. That is, we have two layers, another 0.01. If this market pick this position and come back in our favor to our first entry, we will be making this 10 pips. We'll be making profit of 10 pips. If we are at 0.01, that is, we'll be making 1,550 naira for this 10 pips movement. And if the market breaks our first entry and comes to this point, that is, this first position is paying us 20 pips from here to here, 10 pips from here to here, 10 pips. That is, this single position is paying us around 3,000 something. Then this first entry that we entered is paying us 1,550 naira. Now you add this 3,000 and something, 3,300 plus this 1,150 naira and sum it up. That will be the amount of money these two positions will be paying you. If you are using 0.01, that is 20 pips from here, which is around 300,000, no, around 30,000, right? 10 pips is 1,500 times 10, which is 150,000. That's around 300k. If it is 1.0, that is 15,000. Okay, if it is 1,500 times 10, that's 15,000. If it is 0.01, that's if it is 0.1, that's mini lot size. But if it is standard lot size 1.0, from here to here, this single position will be paying us 300k, and this second one will be paying us 155,000 naira. That's around 500k. Just these two positions moving from here to here. Just look at how short or how few the pips are, but it will be paying you much. And that's the power of bigger lot size. And to put a bigger lot size, you need a bigger capital. So imagine using 100k and putting one standard lot size, and the market goes against you with 10 pips. Just that 10 pips will blow your account, because 10 pips going against you is minus 155,000, and you are having only 100k in your account. So that means it's going to blow your account even before reaching your 10 pips. So I hope this is clear, and I will explain more in the next video. I don't want this video to be longer. Then let's explain more about this on the next video. Let me delete all this and see you in the next video for better and more explanation on how you can calculate your pips to know how much you are risking when you enter any trade. Okay.